No, yeah, that's 35%. Your test 1 or your assignment was 25. Your test 2 or your test, should I say, was 30. Then your exam is going to be 35.
Okay, and then if that pass is 10%.
This is 10%, yeah. So, yeah. So, as I highlighted, today we are doing year-end procedures, my favorite unit. Okay, because here we're looking at the bottom line. Okay, did we make a profit or did we make a loss? Okay, it's a pretty straightforward unit. Okay, so now here we're just bringing it all full circle, right? We've messed around, we've played around with bookkeeping. Okay, we know that it all starts with a transaction. All right, then we have the source document, then we have journal entries. Okay, that being your cash receipts, your cash payments journal,
Is a
general journal, all of them. All right. Then we know that all of those we post to the general ledger.
So now what is the, because I remember getting confused about this. A general ledger and general journal.
Yes.
So the general journal is basically just a holding point until it's pushed all through to the general ledger, right? Because it goes into, things go into the general ledger, general journal, that don't go into the other journal.
That don't go into the other journal?
So it's basically just a journal.
It is a journal. The general journal is a journal.
Okay.
Okay. Now, the general ledger is not actually, well, it is like a general ledger, but we don't really actually get into that. But when you think general ledger, for the purpose of this course, you're thinking of every single individual account that we have in the business.
So it's like a list of accounts.
Exactly.
Okay. And that's the balance sheet and nominal. Is that?
No, the balance sheet, that's chart balance sheet you're thinking about. Here we're opening every T account. So for instance, when we have rent expense, when we have cost of sales, when we have trading inventory, each of those is a separate account under the general ledger.
Or is general ledger the one with the indented
Exactly, the debit and the credit side. Okay? And then the balances of those T accounts, we then post to the trial balance. Makes sense? Exactly, balance sheet and nominal section. Okay? So that's the bookkeeping process. All right, we always want to end off with the trial balance. Okay? Right. Cool.
Are we doing accrued yet?
Not yet. We will play around with that in unit 1B.
Okay.
Yeah. Then we have the accounting cycle. Okay, and here you have your income statement and your balance sheet, or your statement of comprehensive income, and then your what do they call it? Statement of financial position. Okay, so this is now what we now are interested in at the end of the financial period. Okay, come in. We just started. No problem, man. Have a seat. All right. So here now is what we're interested in, year-end procedures, because we only, well, you can produce this on a monthly basis, right? But our financial statements, typically we produce them at the end of the financial year, okay? So for your purposes, we're only looking at the income statement and the balance sheet. But I know both of you have had accounting before, so you do know that we have the statement of changes in equity, we do have the notes, we do have the property, plant, and equipment, all right? We have the cash flow statement, all right? We have all those financial documents, all right? But we're only interested in the income and the balance sheet.
These values will be tested out
for now, yes.
So we don't have a cash flow at this current.
No. Actually, you actually won't play around with these, but I think for the purposes of this unit, you should at least understand them.
Yeah.
So before we go any further, when we're talking about year-end procedures, the title of this last unit, what we want to do at year-end procedures, before we can actually produce those financial statements, we need to close off all the accounts, all right, in our books. All right, we need to say, okay, how much was rental income? How much was, what is this, rent expense or cost of sales for the year, okay? All right, so that's the whole purpose of year-end procedures. So it's the process we need to undergo before actually doing our financial statements. Okay, right. Now, the purpose of running a year-end, firstly, to determine the financial performance of the business for the past financial year. Okay, how do we assess the financial performance of the business? Tell me.
Total revenue and
Exactly. In other words, your income statement, right? You need to see, did we make a loss? Did we make a profit? Like you're saying. In other words, have a look at our bottom line. Reason number two, to determine the financial position of the business as at the last day of the financial year. How do we check the financial position of the business?
Is that cash flow? No.
Nope.
That's the balance sheet.
That is the balance sheet. Okay. We need the balance sheet. You need to look at the balance sheet in order to assess our financial position. Now, I don't think I have that thing open. Let's see. Something I want to show you guys before I go any further gears. Is that not your exam?
That is our exam. There's nothing else.
It's really not far away.
Not at all. The whole semester is done, but we finished the whole thing.
It's
Terrifying.
must be nice to be a lecturer, right?
No, but I feel like the marking must be so shit. If you can't read someone's handwriting, I could never.
Yeah,
I just, if I'm tired, yeah.
I think that's one of the reasons why I stick to your numbers related modules.
Yes.
Because 1,000 is 1,000, you know?
Yeah.
Yeah, no, but it gets hectic. It gets hectic. Sometimes you're like, I don't know how you're going about this or
Oh,
where.
yeah, it's following the train of thought.
Yeah.
The students.
Can be really.
Especially if you don't know what to tell you. Like, yo,
Hey!
that you can always say, you tell you the one thing. I wrote the biggest load of.
Yesterday.
Yes,
Bro, no, bro. Because you're using yours finished first, bro. So you take in a lot of it. Let's go right here, bro.
So this is what I wanted to show you guys. Okay? And this is in relation to your financial position. All right? So you guys are familiar with this because you've seen a balance sheet. Okay? So we know that we're in the balance sheet, we're looking at the accounting equation. We're confirming the accounting equation to be true. How so? Because we're looking at all our assets, non-current and current, to get our total assets. Okay, cool, no problems. Then we say, okay, is that equals to our owner's equity and our liabilities? And then we obviously calculate what is our owner's equity, all right? And then we find out what is our liabilities, all right? And then we obviously add those two together, all right? And the total of that should equal the total of our assets, okay? So that's us seeing our financial position. And now, why do we say that is us checking on our financial position? Because we're saying, okay, we know that our assets, and this is something I was actually speaking to earlier on in the week. No, actually, last week, I think it's on the Tuesday. Our assets are not funded only by us. All right, we may have gone and borrowed some money from FNB or ABSA or wherever, one of those financial institutions, right? And that's why we're saying owner's equity, whatever we put in the business, and then plus your liability, okay? So somewhere, something isn't right. Maybe we've left out something, maybe we've overcast something, undercast something to that effect, okay? Now, what I wanted to mention, the last thing I want to mention in relation to this is us checking our financial position and saying, okay, how much debt versus equity, right? Our own funding, or how much have we funded our assets with debt? All right, that's us seeing how healthy is the business.
Isn't that ratio?
Yeah, you typically be looking at ratios.
Yo, I did ratio of the worst moment of my life.
I love that kind of stuff. I love
yeah, you would. It's so smart.
All right. So anyway, that's what I wanted to just put before you guys before we proceeded on. So that's what we are determining when we say financial position. Okay, right. Let's move on. Determine the financial performance. During stage 1, the gross profit for the year is calculated. The bookkeeper makes use of a temporary final account called, to calculate gross profit, called the trading account. Okay. Now, what we're about to discuss, I'm just giving you the theory to what we're actually going to go and do in the second session. Okay. So this is really just for your understanding as to what are we doing, why are we doing this now, and so forth, so forth. So this trading account is not an account that we have throughout the year. It only pops up when we're at year end. And the purpose of it is for us to calculate gross profit for the year. Okay? As soon as we're done doing year end procedures, this is also going to fall away. Okay? Right. And you'll see that as we actually practically do this. All right. Then during stage 2, the net profit is calculated. All right. The bookkeeper makes use of the temporary final account. Again, so we see another final account. But this account is now to calculate net profit. All right. And what is this account called? It's called the profit and loss account. Guys, as you guys know, all my slides are available on More Resources. This set of slides, guys, you are going to need. And I'm going to tell you at the end exactly why I say that. Okay? So, determine the financial performance. Okay, we're continuing from there. When running year-end procedures, the nominal section accounts in the chart balance are closed off against the trading and profit and loss accounts. So the two temporary accounts, we're closing off the nominal account section in your chart balance. Okay? So in other words, what are we saying? We're saying our incomes and our expenses all get closed off to either the trading account, the first temporary account, or your profit and loss. Through my process, you'll see exactly. All right, I could talk about it now. Remember, in the trading account, we're calculating gross profit. To calculate gross profit, we're basically saying total sales minus your cost of sales. That's it. All right. And yes, there's one or two things that I need to also throw in there, but I think when we do the exercise, you guys will see. All right, it'll be easier. Now, every other account, all your other incomes, all your other expenses will then get closed off in the profit and loss account, temporary account. Make sense?
They get closed off from those accounts into other accounts.
So your trading account is going to get closed off in the profit and loss account, and your profit and loss account is going to get closed off to the capital account.
Okay.
Makes sense. But once I give you that procedure, because now I'm just explaining the theory behind why we're doing it, when we're doing it, so forth, so forth. Once I give you the procedure, it'll be like, guys, you just have those two slides, and any question they give you, you should be able to answer, provided that you've actually practiced. Okay? So it's an easy 30 marks for you in the exam if you've practiced. Okay? So yeah. This essentially means that the balances or totals of the income and expense accounts become nil at the start of every subsequent financial year. This is another reason why we actually do year end. Okay? We want to start afresh. We want all our accounts, income and expense accounts, to become zero, so that moving into the next financial year, when we're looking at rent income, we're not looking at any money that we actually received in the last year. When we're looking at stationery expense, all right, we know that it's all the stationery we bought this year. It's not including some of the stationery we bought the year before. Okay? So that's exactly why we want to bring all of these accounts to nil, to zero. And when we say closing off, that's actually the process of bringing that account to zero, to nil. Okay, awesome stuff. Right. Then determine the financial position. To determine the financial position of an entity, as at the last day of the year, a statement is drawn up reflecting the state of the accounting equation, therefore showing all assets are equal to the owner's equity plus liabilities. And you guys, please tell me, which statement is this? Which statement is this reflecting the state of the accounting equation? No! Balance sheet, yes, we just spoke about it, okay? Balance sheet, all right? Can you see? Therefore, showing all assets are equals or equal to owner's equity plus liability. All right, all right, all right. Okay, so in years past, I would have actually showed what I just showed you at this juncture with the accounting equation and all that stuff. It was just that we were talking about those things already. So I just thought, no, might as well bring it down. Okay, all right. So you see how accounting is all connected. If you don't understand your trial balance, here you're also going to have problems. If you don't understand what an income and expense are, here you're going to have problems. If you don't know how to use your general journal, here you're going to have problems. All right. So it's one of those things of, like I always told you guys, if your foundations are a bit, not too good, then as we move forward, you're gonna have challenges. But I know you two obviously had accounting, so and obviously you've been working, so you should be just fine. Now, this is why I said that these slides, I need you guys to download these slides, even if you are comfortable with everything else we've done, because this process, you don't get it in your textbook. Yeah, you get it in your textbook, but it's not summarized the way I have summarized this. And if you can understand this, which I'm going to explain now, trust me, you don't need to go back to your textbook for no other reason than to practice questions. Okay? It's a very simple unit, and honestly speaking, we don't get why students don't collect as much marks as they should with this unit, because it's very simple. I think all that's needed is to understand the process of what you're doing. So cool, year-end procedures. Now we're delving into the steps. How do we execute year-end procedures? First things first, we need to close off sales returns to sales. Why are we doing that? We want a true reflection of how much sales we actually had during the year. So during the year, we've sold. Obviously, during the year, we also have people coming back and saying, I don't actually like that jersey. I don't actually like those shoes. I'm returning them. All right, yes, so that we can calculate net sales. Okay, once you've closed off sales returns to the sales account, all right, we then go on to close off your sales to the trading account. Can you see that? I put sales there, and then which account are we closing off to? The trading account. If you see in step one, I have sales returns, it gets closed up to the sales account. Okay, I've done that intentionally, so you know exactly where this is supposed to get closed off to. Okay, then after you close off sales to the trading account, you then need to close off cost of sales to the trading account. Remember what's going on in the trading account? We are calculating gross profit. What do we need to calculate gross profit? Simple as that. Sales and cost of sales. Right. Now, once we close off once we close off cost of sales to the trading account, it has now served this purpose. We can now calculate gross profit. And at that juncture, we then close off the trading account to the profit and loss account. Remember, I told you earlier that we close off the trading account to the profit and loss account. Once that's done, the trading account has now fallen away. Remember, we said it's a temporary account. We're only using it for year-end procedures. Cool. Then we get into the balance sheet. And at this point, we're closing off all the nominal accounts. In other words, our income and expenses. They're all getting closed off to your profit and loss, which makes sense because all your income and expenses obviously are what you need to calculate your profit or loss. Okay? Right. So that's what we do after closing off our trading account. Okay. Now, let's talk a little bit more about closing off our nominal account section to the profit and loss account. All right. So, when it comes to the incomes, okay, remember when we are closing off an account, we're bringing that account to nil, right? Now, during the course of the year, whenever we had an income, where would we record that income, on the debit or credit side? And what did you say? Oh, okay. So let's say we received dividends, right? Do we credit that in the dividend income account, or do we debit it? Does it increase on the credit side, or does it increase on the debit side of the dividend income? That particular income account. Yes. All right. It would be credit. All incomes increase on the credit side, as you both have highlighted. Okay. So now that we're closing off these incomes, okay, how would we bring these accounts to zero? We do the opposite, okay? So we have to debit all of these individual income accounts in order to bring them down. So in other words, if our rent income was 100,000 during the financial year, obviously that's already sitting on the credit side, okay? Now to bring that to account to zero, we then obviously have to debit 100,000. Does it make sense? So it's easy stuff, okay? Then it's the same principle with our expenses. We know that throughout the year, whenever we incurred an expense, we would debit that account, debit it, okay? Whatever expense it may have been. So now to close off the expense, we need to credit that expense account. Does that make sense? That specific expense account. So if we're talking about any expense, such as stationery, for example, such as packaging material, any expense account, we have to credit it to bring it to zero. Does that make sense? And that's what I've done over here. So now this is now the double entry taking place. So remember we said all these incomes and expenses, the incomes, for example, are getting debited to the profit and loss. Okay, in those specific income accounts. So for instance, dividend income, we're debiting profit and loss. Now, when we go to the profit and loss account, can you see, the incomes are going to be on the credit side because that's that double entry. Then, in the specific income account, we debit it, but in the profit and loss, what are we going to do? We're going to credit. Okay, so your incomes are going to be here, and your expenses are going to be here. Does it make sense, man?
That works normally because incomes are supposed to be on the credit, but the opposite journal would do the opposite, to take all that money out of the account and put it into the
100%. Okay. Makes sense. Okay. Right. Now we can continue with our process. Step number 4. We've closed off the income and we've closed off the expenses. Step number 4 is now to close off our profit and loss account to the capital account. And here, whilst we're closing it off, we're calculating whether we made a profit or a loss. Okay? So I'm going to go back. Just take note of this here. Debit. If debit is greater than credit, that means we made a loss. So what do we say? What's on the debit side? All our expenses. So if we have more expenses than income, we made a loss. Okay? If we have less on the debit side than we have on the credit side, then it means we made a profit. Okay? Just going back, just to so you can see it visually. Hey. Okay, there we go. So here, debit side is our expenses. If our debit side is less than our credit side, where we have our income, then we made a profit. If sorry. If our debit side is more than our credit side, then we made a loss because our expenses are more than what we actually generated. If our incomes are actually greater than, then we obviously made a profit. Okay, just so you can see it visually. Okay, then when again this profit or loss is posted then to the capital account. Okay, that's step 4. Profit and loss account now 4 of the way. It's done. Remember, it's a temporary account. Then we go to step 5. Okay, the drawings account now gets closed off to the capital account. Okay, the drawings account now gets closed off to the capital account. So in other words, we're going to have a new capital balance for 2 reasons. We've just added in our profit to the capital account, or we've deducted our loss from the capital account. That's the first reason. Second reason, we have now also closed off our drawings to the capital account, which will decrease our capital in the business. Does that make sense? So we're going to have a new capital balance after year-end procedure. Okay. Then the last thing that we now need to do is do our post-closing trial balance. Okay, our post-closing trial balance, remember we've closed off all the nominal accounts in the trial balance. The income and expenses have been closed off. So we won't have a nominal account section in the post-closing trial balance. All right, because all those accounts have been brought to zero. Does that make sense? So all that you will have in your post-closing trial balance is your new capital balance in the balance sheet section, because remember, capital falls in the balance sheet section. You won't have any drawings, because remember, drawings have been brought to zero, okay? And then you will have assets and liabilities. And these assets and liabilities will be the same amounts that you had before you did any year-end procedures. Does that make sense? Because your assets, nothing changed with our assets and our liabilities. Nothing changed with those amounts. We didn't do any closing offset. Okay? It's only income and expenses. I love when I ask you guys post-closing trial balance, because you can never get this right if you don't understand all the other things. So it just shows me immediately, did this person actually understand Unit 9? Did it make sense to them? Okay. So if you look on this in my textbook, 270, you'll see yen procedure, okay, and then in the at the bottom of page 271, I know it's a different page than you guys have. Let me see. Under example 9.1. Right. So this is the example 9.1. There are the steps. Can you see? They've written out a whole lot of content. I've summarized it for you guys. That's why I say these last two slides, if you want to ignore everything else, it's fine. Because everything else is literally what I just explained to you. So you understand these steps and why we're doing them. Does it make sense? All you need, if you have these last two slides, you practice, you're golden. I can tell you, by the end of this week, we're actually done with this unit. That's how easy it is. But it just requires your practice. I think it's actually, I'd say it's actually more easier than Unit 8. And the reason why I'm saying that is because it's more interesting. You know what I'm saying? Unit 8 is not that interesting. Unit 8 is salaries and wages. Okay? So it's a drag, you know? But this is actually interesting. But anyway, so I just wanted to show you why I'm saying don't waste your time with this. And you can obviously then just use these to remember your process. The only thing that I want you to take note of, though, is at the end of the steps, after step 8, you'll see that it says owner's equity is equals to capital plus profit minus drawings. Okay? So I just want you to take note of that. All right? That's a formula that you can use to obviously calculate owner's equity. I think at the beginning of when we did a question, I think is it 2 point something in your textbooks, I showed you guys, they asked us to calculate owner's equity, and we used the accounting equation. Remember, the accounting equation is assets is equals to owner's equity plus liability. So we just threw liabilities onto the other side, so that it was assets minus liabilities is equals to owner's equity. Sometimes you might not have that information, so you would then have to use this. What they're trying to do is they're trying to see, do you know this other formula to calculate owner's equity? Okay. So you need to know both, okay? You need to know both. All right, cool. So just take note of that. Otherwise, guys, that is the theory side to your Unit 9, okay? Then what I would suggest that we do at this juncture is that let's have a break. Then when we get back, we will actually jump into a practical question. We'll do question 9.2.